following is a presentation of TFNN. The Trader's Edge with Steve Rhodes. Call now, toll free at 1-877-927-6648 or internationally at 727-445-1044. The Trader's Edge. Now, Steve Rhodes.
Good afternoon from TFNN. Welcome to the July 28th, terrific Thursday edition of today's Trader's Edge show. I'm your host, Stevie Perseverance Rhodes, who absolutely knows that each of us should always be pioneers of our future versus prisoners of our past. Hope everyone out there is having a great day. Let's make sure that we have an extraordinary one. And of course, the easiest way to do that is to always remember that life happens for us, not to us. That's right. When you and I make that one little 2x4 shift, it means we can find the gift in every set of circumstance that life is going to toss at us. Today, you and I, we're going to go take a look at the circumstance of these markets, what the bulls and the bears, what the buyers and the sellers are communicating to you and I at just past 1 o'clock in the afternoon. I want you to know that I'm absolutely grateful for your presence here, but more importantly, I'm here to serve you. So feel free to pick up that phone. Now's not too soon. 877-927-6648. Of course, internationally, 727-445-1044. So let's go ahead and get this show started on terrific Thursday. Of course, this is Tiger Financial News Network. I'm Steve Rhodes, and welcome to the show. Right now, we have pretty much a flat market. The Dow is off 2. The NASDAQ is flat. The Russell's down about 2.5, 3 points. The Dow, though, the different story, off 50 points out there. You've got gold up 50 bucks. How about gold up $5? Silver up 23 cents. Light sweet crude back 81 pennies out here. Leading the charge, the upside, it is AutoZone up $24. That's up 3%. You've got O'Reilly Automotive up about 3.5%. That's up. So you got Ford disappointing. Headed to the downside. You've got the auto parts stores, AutoZone, O'Reilly Automotive. Who are the other ones that are out there? I'm sure they're to the upside as well. You've also got NetSuite. That's up $16, I believe, buyout there. Tempur Sealy, that's up $10, 16%. Lending Tree is up about 10% or $9. Grubhub up 25%. That's up $7.60. CoStar Group Inc. That's the leader to the downside, off $11 and change. Ultimate Software down about $10 or 4.5%. Public Storage off $8. Triumph Group. Unlike the Triumph car, it's not triumphing though. This is down 21%. That's off $8. So we'll take a look at some of those stocks and anything else that you'd like. You can send me an email, steve@tfnn.com. I'll try to get to those. Of course, inside the den, just go ahead and send me an instant message. Type something in. I'll get to your. But of course, I'd prefer to just hear from you by voice. Nothing like hearing your voice. So 877-927-6648. Okay, so where do we begin? Let's begin, again, always take a look at some different time frames to get a good view as to what the markets are doing. Let's first start off with what? Let's first start off with this. Let's first start off with, and I know you've heard me say that a couple times. What we're going to start off with is the following chart here. This is a daily chart, by the way. Now, this is a daily chart. If you watch us on TigerTV, I hope that you are. You're seeing Stevie's red line along the NASDAQ composite. That is upper panel number 1. I'll describe to you for each of you that are listening on your mobile device out here. But, of course, you can get Tiger TV on your mobile device in HD, no less. The second panel is the NDX 100. The third panel is the Russell 2000. The fourth panel is the semiconductor index out here. Now, Stevie's red line is muy importante. Why? Because it helps you to understand which side of the trade you should be on. Now, look, this is not going to be a leading indicator tool. You want a leading indicator tool? We'll take a look at A to B equals CD patterns. We'll take a look at price relative strength. We'll take a look at seventh wave counts. Those are our leading indicator tools out here. Right now, with a market that's been choppy, to say the least, we want to understand what our trend-based tools are communicating to you and I. And it's a different message for the Dow, which we talked about yesterday as week. A little bit different message for the S&P 500. But I want to take a look at these 4 indices here that we have on my screen right now. And what we can see what we can see is that all prices above Stevie's red line. The Russell 2000 continues to test and reject it out here. Now, for those of you that believe that there's a serious top that is in place, and it's in place right now, I would say, why do you believe that? You certainly can't say that with regard to these indices. Let's go back. Let's take a tour back. Let me see if I can find it. I'm sure I can find anything. Let's go. Well, we're already at 1999. Let's just simply start here. It's not where I intended to go, but as long as we're here, let's take a look at the 2000 top. Now, each of the indices tops at different times. In the case of the NASDAQ Composite, it was March 13th, 2000. Now, take a look at how price was above Stevie's red line. The very next trading session, March 14th, what happened was price dropped below Stevie's red line. Now, take a look at the other indices as well. You got the NDX 100 right below it. You've got the Russell 2000 right below it. You've got the semiconductor index, which, in fact, took till March 15th before it dropped below Stevie's red line up at the top. So unless you've got some other type of leading indicator tool, which you may, that says that the top tick is already in, such as July 20th, which is when my analog pattern that goes back 84 years says that there was supposed to be a top, and thus far in the Dow, there has been. But that tool also says, or another version of that tool, says that there's a bottom just around the corner. So we're taking a look at Stevie's red line out here, which is really important. If you'd really like to get access to this, just come on over to the homepage at TFNN.com and sign up for my Mastering Probability newsletter service, and we'll even get you access to the workshop where I teach you how to actually calculate this on your own for each of your instruments. Now, that's in 2000. Let's fast forward to let's go take a look at 2007. Right, so let's take a look at 2007. We'll get there. I think I need to go a little bit quicker than that because, let's see, where are we at? We're 2003. No, we want to try to get to 2000. Here we go. So we're in 2007. Now, in 2007, right, we know we're taking a look primarily at the October time frame. And if we look at the case of the NASDAQ Composite, November the 1st was actually when it formed its high out here. The NDX 100, the same thing. In the case of the Russell 2000, it was quite a bit earlier in time, was back around July, I believe it was right around July 16th or so. And in fact, inside the semiconductor index, it was July 20th. Now, you know, yesterday, if you were listening to the show, I posed the question to you. Have you ever seen a bear market begin or move with the semiconductor index moving to all-time highs, moving like it did the upside? Of course, I kind of led you, down that path. And the answer is no. And here's a perfect example, right? You've got, a lot of times people take the transports and say, hey, the transports are going to give you an early signal. And sometimes they do out here. I don't have the transports up on my screen, but, take a look at the semiconductor index back in 2007, certainly giving you an early warning sessions before the NASDAQ Composite, in this case here, decided to decisively begin trading down below Stevie's red line. Look, this is an important trend-based tool that helps us understand that until you get down below that, says prices want to continue to rise out here. So, yes, do we have the Dow that's trading below Stevie's red line? Yeah, we can put that up on the screen. Or the New York Stock Exchange, the answer is yes. And we'll continue to take a look at this. We get back from this break. We'll go take a look at, hey, where are we at with regard to monthly charts? Because that's really important. We'll take a look at some intraday charts out here. But, folks, please do not get tied to the short side of this market. There is just not enough information out there unless you've got some other type of leading indicator to suggest that you do so. Steve Rhodes with TFNN. We'll be right back. Hi, I'm Steve Rhodes, host of the Trader's Edge, heard daily at TFNN.com and author of Mastering Probability, a daily investment and trading newsletter service that I send out each morning by 8 a.m. My morning newsletter service covers exactly what the markets have been doing since last night's close, providing you with an edge on your trading day ahead. You get actionable trading ideas, including the exact entry, stop, and profit targets. Plus, I'll teach you the patterns and hidden market correlations that will make you a better trader. As a subscriber, you'll gain access to my 90-minute money management workshop, where I'll teach you the secrets that'll save your assets. The bottom line, I've got your back, including a 30-day money-back guarantee. See for yourself the type of analysis I provide each trading day by signing up for Mastering Probability today. With nothing to lose, this is an offer you should not pass on. Mastering Probability can be found under Trading Newsletters on the front page of TFNN.com.
TFNN is excited about our new software charting program, The Art of Timing the Trade Charts. In collaboration with Tom O'Brien and using his best-selling book, The Art of Timing the Trade, Your Ultimate Trading Mastery System, David White has programmed an outstanding piece of software that will complement any trader's methodology. Using this first-of-its-kind program, The Art of Timing the Trade Charts allows you to scan thousands of stocks for Fibonacci formation setups, including Gartley's, ABC's, butterflies, and much more. The Art of Timing the Trade Charts is designed to help you when scouring the markets for stocks just beginning to form the trading patterns that many investors spend days, weeks, or even months searching to find. And right now, we're offering licenses available at only $79 a month. We are so confident that you're going to love this new charting software that will even give you a 30-day unconditional money-back guarantee. Don't miss out on this incredible new piece of software. Get your copy of The Art of Timing the Trade Charts today by visiting TFNN.com. The Path of Least Resistance is David White's daily trading newsletter, and if you're looking for active trading ideas, then now's a perfect time for a 30-day free trial to this powerful daily trading advisory service. David uses his years of trading experience to offer his subscribers his trading ideas each morning in his Path of Least Resistance newsletter. Using a combination of equity trades along with options, David keeps his subscribers up to date with all pertinent market information with intraday afternoon updates when warranted. Don't miss out on this great chance to get a 30-day free trial to David's daily newsletter, The Path of Least Resistance, with no obligation to pay anything. David has been delivering solid recommendations for his subscribers recently, and if you'd like to see the type of newsletter he delivers every morning, then visit the front page of TFNN and you'll find The Path of Least Resistance under Trading Newsletters. For all the details and to start your 30-day free trial today, log on to TFNN.com now.
Steve takes your phone calls now. Toll free at 1-877-927-6648. Internationally at 727-445-1044.
Welcome back to the show, folks. So the Dow has been trading in a 2,850-point consolidation range for about 15, 16 months out here, measured from the low to the high. The high, by the way, 18,351. Again, if you watch us on Tiger TV, the bottom panel of my chart shows you what that level is, which is the this is a weekly chart that we're looking at. That goes back to the week that began May 18, 2015. So 18,351 is a really important level for the Dow to hold. Now, the S&P 500 has also been traveling in a consolidation range out here. And the key is just watching 2134.72. So I absolutely anticipated and expected the market to go ahead and pull back. As you know, my subscribers and I, we went long the Dow on Brexit Day. June 26th, I think, was the day. We exited our long trade. We took all of our profits, biotech sector, inside the Dow Diamonds, right at about the price where it's trading at right now. So we've avoided a bunch of the sideways choppiness move out here because my anticipation is that the market was going to go ahead and pull back through this Friday, that'd be tomorrow, and or Monday. And I wasn't really sure just how far of a retracement or a pullback that we would get out here. And I just believe that the proper move was to just simply move to neutral, not bearish. We could have stayed long because of the nice entry price that we had there. But with the uncertainty as to where the pullback, I know where I expected the pullback to move back to, and we're not even anywhere close to that. The mere fact that we are staying up at these levels is really, quite frankly, is longer term bullish out here. So these are the price points that you want to pay attention to. Now, where are we? And I mentioned the 2,850 price point inside the Dow, and therefore its price projection. Here's a monthly chart. The price projection, because we are very much potentially, I say potentially, I won't know till the first week of August, but we are very much potentially in a favorable seasonal cycle. That's going to last for another 5 or 6 weeks out here. And that says that there is a very good possibility that it'll just blow your mind where the Dow can actually trade up to, which is 21,200, give or take a few pennies out here. If we take a look at one of the stronger indices, because the Dow is not that, although on one hand, I could argue that it is because it's broken above a consolidation level out here. So, in one sense it is, in the pullback, it just happens to be one of the weak links out here. Let's just take a look at the NASDAQ composite. and see what it's doing. Now, its all-time high, by the way, its all-time high is 52.3194. Its 2,000 high is 51.3252. That's the green line. We're trading at 51.41 right now. Now, it's already made that 100% move of a move. That's where you get all the way back to a significant previous swing point. That occurred back in June and July of 2015. Then we saw retracement. Of course, you can each see the consolidation pattern, right? All we have to do is just draw a nice little square, in essence, around the consolidation out here. And that would say that on its next move higher, let me just take that little box. Oops, there we go. There we go. Delete that. Come on. What are you doing? There we go. That says that the next move, if it can get about 52.31, is going to take us into about the 62.49 area. So its measured move is already done. If it continues to trade above, but today it's just, slightly doing it, right? 51.32.52. But as long as it trades above that, and then it can take out 52.31.94, what do you think its message is? Its message is clearly higher price. It will have broken above a significant swing point, which should act as support, 51.32.52. So we have that to take a look at. If we go take a look at the NDX 100, try to figure out where that is going to move to. It's trying to make its way back to its all-time high, which is 48.16. You're at 47.06. It could do 48.16 by 5:15 today. Maybe 6 o'clock. Maybe now that won't be the NDX 100 necessarily, but I'm referring to we've got Google coming out with earnings. I'm not sure who else is coming out, but that could easily be a 50-point move. That takes you to, let's say, 47.55, you're at 48.16 to get back to the highs. Maybe at 48.16, maybe when the NDX 100 makes it all the way back up to the highs, maybe that's when we begin to see some type of pullback. I'm not seeing the signals here just yet, and I don't believe that we will as long as the market can stay afloat of where it is today, tomorrow, Monday. We're just about to get into fund buying season, right? The cycle inside of July and August out here. So that ought to get things moving to the upside. Ought to, but we'll see what happens. But the NDX 100 clearly headed up there. Let's take a look at the Russell 2000. That happened to be one of those charts we looked at on Stevie's screen that says go or no go to the short side. It said no go out there. If you take a look at the Russell 2000, well, shoot, it's headed to its previous all-time swing point high, which was from the month of June in 2015. Needs to get up to 1238.65. That's the bottom of the monthly candle session. But what you and I know is that the Russell 2000 is just trying to complete its consolidation break, which will take it to 1371. Its trend line, really, inside the Russell 2000 is the tops trend line. The high from back in 2000, the high back in 2007. As long as price stays above that, its trend is its friend, and it's back inside that trend. It's back above that level out here. So it's got that longer-term consolidation that it, too, wants to go ahead and complete. The S&P 500, if we take a look at it, we know on the daily or the weekly basis, it's broken out of a larger consolidation. By the way, that consolidation is measured here in this smaller yellow triangle. Let me move the box down. This larger yellow triangle is nothing more than this. This is the consolidation pattern that the S&P has broken out of. It did this back in 2013, so it still needs to or still wants to go ahead and complete that. That's the one that gives us the price objective of 24.50, 23.50. And for those of you that are bears, I know you're sitting in your chair saying, "No way." I'm here saying, "Way." Not just way. These are technical patterns we've got two breakouts, in essence, or two consolidation breakouts inside the S&P 500. The measured move, by the way, forget about the longer-term consolidation. Here's the measured move. It even takes us to higher ground out here. That's why I say between now we've got the 2350 to 2450 level that the S&P 500 is suggesting to us. So these are the longer-term charts. That helps us get rid of some of the noise out here. Can there be some pullback? Yeah, of course there can. But it's a pullback that you want to be looking for in order to buy. And if not, I'll be out here. I'll be watching your hind butt, tuchus, whatever it is you want to refer to it as. I'll certainly, alert you when, hey, this message here of these markets has changed. That's what you and I have to do each and every day. Step in front of these screens, take a look at the patterns, make sure that we go up a level or two, right, a time frame or two, to get a better view and a better picture of what the market is really doing out here. If you've ever gone to a basketball game, I don't know about yourself, or a hockey game, and ever sat in the nosebleed seats. Sometimes they're not even nosebleed seats. I know some arenas where the private boxes are up at the top. Now, if you've ever been up there and you watch, even football, whatever it is, and you watch the players on the field, they look like these little ants. You can actually see the play forming, right? When you're up at those upper levels, I can see the play forming. It's so much easier than when you're sitting on the ice or sitting on the field. And when we come back and we take a look at these longer term patterns inside the market, that's all that we're doing. We're getting up to a high level so we can look down and say, aha, that's what the markets are doing. And that's a beautiful thing. So screw all the stuff that they talk about on the news out there. Just pay attention to Stevie and TFNN. This is Steve Rhodes. We'll be right back. We're going to go take a look at Google for Duffy in the Den, and be happy to take a look at what you want as well. 877-927-6648. We'll be right back.
In quiet markets, investors search for new trading opportunities. We'd like to introduce you to a new product that provides opportunities even in flat markets. Nadex, the North American Derivatives Exchange, is a new and innovative Chicago-based exchange registered with the Commodity Futures Trading Commission, and unlike most other exchanges, Nadex allows you to trade directly through them with direct market access when using their trading platform. Nadex never charges a fee to use their platform, which even includes real-time charts and full customization capability. Nadex's unique short-term binary options allow traders and investors to capitalize on strategies even when the underlying markets are quiet. Nadex's innovation has allowed them to come up with a line of unique trading products that are unavailable anywhere else. See how it works at nadex.com. That's NADEX.com, or click on the Nadex banner on the front page of TFNN.com. Futures and options trading involves risk and may not be appropriate for all investors.
Many of our new listeners have heard about the Tiger's Den, but wondered, what exactly is it? The Tiger's Den is a lively community where professional traders and investors can meet, exchange ideas and information in a comfortable, moderated atmosphere. Hear all of your favorite TFNN shows, plus see all the charts as they happen live during those shows, and have access to all those charts. You can test drive the Tiger's Den absolutely free for 30 days. It will greatly enrich your knowledge of these markets. Details on the Tiger's Den are on the front page of TFNN.com. Platinum, grains, crude oil, gold, copper, cattle, hogs, gasoline, natural gas, coffee, cotton, cocoa, and sugar. These are just some of the commodities mentioned in the most recent issue of Andy Hecht's Techno-Mental Commodity Report. Andy publishes his weekly newsletter every Thursday morning, where he breaks down the commodity market and provides his subscribers with specific trading recommendations based on his trading methodology. By signing up for a free trial to the Techno-Mental Commodity Report, you'll get a full 30 days to try out this powerful newsletter service and see for yourself the types of trades Andy has recommended for his subscribers. When you sign up for a 30-day free trial, you're under no obligation to pay anything. And should you decide to continue, you will lock in the low rate of only $79 a month. Sign up right now for the Techno-Mental Commodity Report and make sure you're ready to catch the next big trade in commodities. For more information and to get started today, visit the front page of TFNN.com. Tiger TV is an exciting way to experience TFNN programming. See high-definition video, giving you crystal clear charts, as well as seeing some of the faces of TFNN's highly acclaimed financial experts with crisp, full-fidelity sound. Catch Tom O'Brien, John Logan, Steve Rhodes, Basil Chapman, Larry Pesavento, Think or Swim, David White, Andy Hecht, and Daryl Martin in crystal clear, high-definition audio and video. Tiger TV, exclusively at TFNN.com. This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
Welcome back, folks. Dow's off 43 points. S&P is flat now. NASDAQ Composite up 3. As far as the S&P being flat, you want short-term patterns. We look at these same patterns on all different time frames to give us a message. Here's the ES Mini. If you're wondering why did the ES Mini go ahead and bottom this morning at 11 a.m., well, it's pretty simple. If you start from the high that formed out here at 340 this morning, and you just start doing your wave count to the downside, you can see you got to that key of G, you got to that 7th inning stretch pattern that took place at 11. What else was price doing? It was moving lower, doing a less relative energy out here. Now we are in wave number 2. If you're asking or wondering where is the ES Mini headed to, 2162 is the next level of resistance on the 10-minute chart. This, by the way, is a 10-minute chart that we are looking at out here. So, pay attention to these patterns. If you don't know about those patterns, you'd like to learn about those patterns, come on over and test drive Mastering Probability. That's how you'll be able to get all the information that you need for that. If we take a look at Google, let's go take a look at Google here for Duffy. Let's look at the pattern. So when I take a look at Google, here's a blank chart. We're going to start with a blank chart out here. Oftentimes I get the emails or the questions, hey, look, for those of you that are just new to technical analysis, or maybe you're not brand new, but you're just getting into it, and you're wondering, hey, like, where did you start? How do you look at a chart like this to try to figure out what in the heck is it telling you? I've been there. And the whole purpose of all of my teachings that I do, whether it's during the show here or during workshops, even more specific, because I can really hone in on exactly what it is that you need to look at out here. It's really to compress decades worth of training, so thousands and thousands and thousands of hours, into just what it is that you need to know. But as we take a look at this chart out here of Google, one of the things that stands out to me, I don't have the volume on this, I'll go ahead and put volume on in a minute, but one of the things that really stands out to me is the gaps that out here, the most recent gap, right? And that, in essence, is a supply line. We'll go ahead and add the we'll go ahead and add that gap, by the way, right out here at 749.55. And until that gets tested and Google is trading inside of that gap, we don't know if it's resistance or not. We know that there, in essence, was a change in polarity when Google gapped down on April 22nd. If we look at the volume there, that's why we have that supply line, because people that were holding Google just as of April 21st, if they had bought it April 21st, the 20th, the 19th, something like that, at 750, they were not feeling very good about Google being a good long-term position when it got down to 663, right? $100 to the downside. So many of those people, and by the way, shares that traded hands that day were about 6 million shares. They're scratching their heads, just saying to themselves, gosh darn it, if it ever gets back here, I want the Sam heck out of Google. Now, I don't know if that's the right move or the correct move, but that is what those people are thinking, especially as price got down there. That's why we take a look at those gaps. They can truly be resistance levels. Now, when price moves above those gaps, it goes ahead and it repairs that window. It's like the idea of taking a baseball, throwing it through a plate glass window or some type of window, and then there's all kinds of shards there. You're going to want to stick your hand through that with all those shards there? Probably not. But when somebody comes along and repairs that window, you're not going to push your window through your hand through that window, I hope, but you don't mind touching that window. You don't mind being around that window. That's when these gaps, these windows get fixed out here. When they get fixed, typically old resistance, which we don't know if it is right now. It's presumed to be resistance at 749.55, but it hasn't been tested. And so right now, Duffy, with regard to what do we think about Facebook, that's a resistance zone. If it gets taken out, where's price going to head to? Well, the first level where price will head to is the April 19th high, and that's priced out at 769.90. The next place would be the swing point here from February 2nd, and that's priced out at 789.87. Why do we go to swing points? It's like major intersections, like driving down the street. You really pay attention as you come up to a major intersection. On a stock chart, your major intersections are where you see those significant changes in trend, a reversal in price direction out here. So it's no different than driving a car, only we're driving along the stock chart out here. Now, we've got plenty of other tools that we can go ahead and add to this chart. We can go take a look at our hidden levels of support and resistance. Oh, by the way, to the downside, where is it that we have some support? You'd go right to that swing point. That's the swing point of June 27th out here. That's down at a level of about 663. So there's your upside potential, your downside potential. The very short term support on this happens to be the daily profile that formed, looks like back on July 22nd. That's 733.16. If that level fails, you'd look for 709.15 to hold as support. Is there anything that gives us any indication as to the way that Google wants to trade after earnings are released out here? We're up against resort. This is a normal place for it to just kind of sit tight and not do anything. We are in wave number 6 to the upside. Could it be something more than 6? Yeah, it could be, but we are, at least for our counts right now, we are in wave number 6. Maybe there's a 7th to come, meaning price can move up, move back the next day, and then move higher. And then, maybe then there's some type of short-term topping going on. If we look at let's look at a longer-term chart, right? Let's turn off these profiles. Let's go see, is there any message here of a weekly chart inside of Google? Let's take a look at volumes. Let's take a look at swing points. And here's what we know. The swing point that it's dealing with right now is a week that began April 18th. That had 14 million shares. You've moved up into that level with 5.4 million shares. Not likely that you're going to be taking on that swing point with volume. It really does say 769.90 ought to be a significant level of resistance. But the reality is it's also trading inside its all-time high swing point, and that's the February swing. So it continues to, and that had volume of 27 million shares. No way do we have that kind of volume, at least not yet. But it does say that 789.87 there would be tested, perhaps tested, and depending on the volume scenario, could be rejected. So there's a trading range with inside of Google. It goes from 665 to the 779 level out here. And Duffy, if you're asking, hey, is there anything that indicates to us which way Google's going to trade? I would say the answer is no. It's not like it moved down to a level of support, which you then say, okay, it's ready to move higher. It's actually moving up into a level of resistance, but we'll see. With the NDX 100 wanting to go test its highs, with the NASDAQ composite doing the same, if we just go back to the indice and we go back to Facebook, we go back to Apple, odds would favor. I would think that they would favor. They would be sending a signal to us that, in fact, price wants to move higher out here. So I hope that helps you out in the den. Again, you can send me a email. I don't see any emails out here. A quiet afternoon in the Tiger's Den, a quiet afternoon on the email front, I guess with all the email problems that they're having in one of the political parties or so. Nobody wants to send emails anymore. No, just kidding out there. Okay, so what else is it that we can go look at here? Let's go look at some shorter-term charts out here. The Dow. I really do think that a key for us is going to be the Dow. So in the Dow, I'll just say we'll start with a 30-minute chart out here. And on the 30-minute chart, is there anything to really help us out to see if there's some type of bottom out here? And the answer is, when I take a look at a 30-minute chart, the answer is no. But I'll tell you what. I'm going to give you the chart and the time frame and the levels that we need to be watching that are going to give us a message as to whether or not the markets are going to move higher. But we'll do that after we go to Max in Houston after this break. Dow is off 43, S&P's down 80 cents. And this is Steve Rhodes with TFNN. We'll be right back, folks.
Are China A-shares hot or not? If you trade China A-shares, now may be time to take a closer look. Trade CHAU or CHAD, Directions Daily CSI 300 China A-share Bull and Bear ETFs. China A-shares in either direction. Visit directioninvestments.com today. An investor should consider the investment objectives, risks, charges, and expenses of the Direction shares carefully before investing. The prospectus and summary prospectus contain this and other information about Direction shares. To obtain a prospectus or summary prospectus, please contact Direction shares at 866-476-7523. The prospectus or summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors. Distributor Foresight Fund Services, LLC. TFNN is excited to offer a brand new piece of market scanning software unlike anything the industry has ever seen. John Logan and his team have spent years developing their market profile tools to finally be able to release the TAS Profile Scanner Plus. And right now, you can get a 2-week trial absolutely free just by visiting TFNN.com and providing us your name and email address. The TAS Profile Scanner Plus is the premier market profile-based scanner in the industry. Powered by the acclaimed TAS proprietary algorithms, this feature-rich scanner is a standalone desktop software that instantly filters over 2,500 global financial markets such as stocks, ETFs, commodity futures, and Forex. Within 3 minutes of signing up, you can have the software downloaded and running on your computer with a complete roadmap of market indicators and inflection points to trade off using the TAS Profile Scanner Plus. Sign up today and try this amazing piece of software by visiting TFNN.com.
Tom O'Brien's weekly gold letter, The Gold Report, gives complete and concise coverage of the entire gold market. Inside, you'll get Tom's commentary on gold, the dollar, the rand, the bond, the XAU, the HUI, and detailed coverage of nearly 25 mining stocks. He'll give you the entry price, price target, and stop price of each stock trade. The Gold Report is a long-term newsletter where the focus is on building real wealth through the management of a successful portfolio of gold stocks. With a lifetime of knowledge and almost 12 years of writing his informative weekly newsletter, The Gold Report, Tom O'Brien can provide you with the important market information to help you make better trades in the gold market. Don't let the next bull run in gold pass you by. To get a month-long free trial to The Gold Report, an $85 value, visit the front page of TFNN.com today.
This segment is brought to you by TFNN. Test drive all the newsletters for free at TFNN.com.
Welcome back, folks. We're going to go out to Houston and speak with Max. Max, thanks for calling. Thanks for holding. How are you this afternoon?
I'm doing just fine, Steve. I got a question. I was just looking at Ford Motor, and it seems to be on holding support. You know, if you look at there's a line that's going all the way from February to like today. And I was just curious, you know, what your thoughts were on Ford, because I'd like to pick me up like 200 or 300 shares of it.
Sure. Okay. So if we take a look at Ford, the first thing that pops up when I take a look at it is the trading session of June 27th. I always like to go back and see, you know, what's it doing as it's moving into that swing point. And that swing point had a volume of, I believe it was 52 million. Give me a moment here to move this back over. 52 million shares. And you've done 98 million shares today without testing the swing point. The top of that June 27th level was 1243. The low so far today is 1245. What this tells me, Max, is that you're going to be able to pick up Ford at a lower price than where it's selling right now. And what you really want to do is you want to wait to see what happens as the low, and it's very likely that Ford will go ahead and test that low of June 27th of $12, because if it's able to break through that level, you'll have an A to B equals CD to the downside, and most likely move down to the February area, which is what you had pointed out. And so that February of 1146 is really more likely the area that you want to be paying attention to. But the volume that's coming out of Ford today and the swing points that it's going to be eyeing, I think you can get this at much better prices than where this is trading right now. And what this also then gives you, it gives you the element of time to evaluate what is price doing as it gets down to those areas. You know, do you have some type of pattern that completes? Is there some type of bullish move out here? But pretty much 1135 is really in play for you.
Excellent. Excellent. So I'll get it even cheaper. All right.
Yep.
Well, thank you very much, Steve.
You bet. You bet. Thanks for calling. That was Max in Houston. Let's go to California and speak with Garo. Garo, thanks for calling. Thanks for holding. How are you doing this morning?
Thank you very much. I'm doing fine. How about you, sir?
Very, very well. And you want to take a look at, and thank you for asking, you want to take a look at that ticker symbol UWTI, which is the three-time long position for crude. And you are the crude king. So tell us what crude is doing.
The weekly chart on that, the daily chart is very bad. The weekly chart is worst. Except here it gives me $17.24, a very good support on the weekly chart. Are you getting such a number?
So 1724, if I go to the weekly chart, I would go back to the week of February 8th, and the low there is 1453, and the high is 1808. And we're trading in, we're at 1824 right now. Swing point wise, from a weekly standpoint, there was volume of 135 million shares, and you're pulling back with light volume, 69 million. So you like to see that, but it has not tested that swing point. And that's taking a look at just simply the UWTI out there. You're probably getting your number. Where are you getting your number of support from?
At TC 2000.
Okay. I mean, is it a specific line? Is it a dot?
Yes, there is a line there on the weekly chart, and it's here. It says support 3, $17.24.
I see. Okay.
If I want to go any further than that, then I have to go to a monthly chart, and that gives me $12.18.
Yeah, I was able to explode this up on my screen just for a moment. So again, and this will be a little bit easier for folks to see at home. So it's really, I would, if I were just not paying attention to crude and just trying to trade off of this chart here, what I would be waiting for, Garo, is some type of test of that February 8th swing point, either the top and a rejection, and then go to a shorter term chart, the daily, to look for some type of reversal. But it looks like, that's where it is headed to. If I take a look at, some of my other tools that I will use just specifically on this chart, let me put this on our screen out here. I'm taking a look at both a wave count. I'm taking a look at my red line out here that tells us when this has changed trend. We can see how that red line has contained price ever since price got below it, which was on June 11th. That says that 27.13, even if you take a long trade, if you were going to take one today and you could time it, right now at 147, it would say that 21.72 would be the place that we would looking to exit this trade, or if price got above it, then start really considering trading something other than a counter trend move out here. Only in wave number 5, I'm seeing price move down with energy, not less relative energy. And of course, what we want to do is we want to take a look at light sweet crude to see how that in essence is trading. And if I pull that up on my screen right now, just for our purpose, I'm going to put the continuous contract up on my screen. And this says that light sweet crude has got some pretty stiff resistance at 43.70, even on some type of bounce out here. I believe that the only level of support that I can find in light sweet crude is a retracement level. And oftentimes a retracement level will in fact act as a level of support. I believe it's the 0.618 retracement area, Garo, and I'll give you that number in a moment off the current contract, which is trading out at 41.15, and we're not far from it. We are trading at 40.44 is the number to be looking at. So to try to time this with your trade and what you're looking at in levels of support, I would think that the first place to consider it would be as light sweet crude gets to 40.44. The 0.618 retracement level can be a place where people just kind of get off the elevator if they've been short, and then if you see some type of reversal there, then you're at least in for a counter trend type move. But that's all that I see is a 0.618 retracement area on the actual light sweet crude chart.
On 40.44, where do you see UWTI?
Yeah, the problem is that there's not a penny for penny, tick for tick correlation. Yeah,
I understand the correlation. Approximately, do you see 14.23 or 17 something?
Let's see here. So for UWTI, see the problem with UWTI, let me see, give me a second, I'm going to go back and forth. So this is already trading on a daily basis into April 5th. Now, because you had me at the weekly, so now we're at least at the daily, which has volume of 17 million, you're pulling back into it with 12. That says, at least on a daily, this ought to test 1681. So that may be the correlating type number that you're looking at. Let me see here on light sweet crude. Where did that swing begin? I was looking at January 20th. Let me see if I can find that same January 20th level inside of UWTI. I can't. So UWTI It's it's just because of the lack of correlation, and maybe this is not tracking light sweet crude exactly. The only thing I can go with, Garo, is really this April 5th level, and pay attention to that swing point. See what happens. A rejection would be this would get down to test 1681, do it with less than 17.9 million shares. But of course, this is going to go in conjunction with light sweet crude. So watch that 40 level inside light sweet crude, 40.44 to be exact.
Excellent. Thank you, sir. Thanks so much.
You bet. That was Garo in California trying to find a bottom in crude. And I'd like him to find a bottom in crude because, although I will tell you that the market has disrespected, it has ignored, it doesn't care that it used to have a correlation with light sweet crude. It doesn't care that it used to have a correlation with bonds. It's doing its own thing. And you and I, we're going to do our own thing as well. This is Steve Rhodes with TFNN. We'll be right back.
Today, it's hard to tell if the economy is coming or going. Regardless, I want my money going in the direction I choose. If that's your stance as well, then you want to know how Everbank can help keep your money thriving just the way you want. Is growing your money a priority? Everbank is committed to a yield pledge promise to pay high yields on your checking, money market, and CD balances. Looking to diversify? Everbank ingeniously developed accessible ways to spread your money around the world into foreign currencies and even non-FDIC insured metals. And when it comes to your wealth, they bring a highly experienced and global perspective to help you manage it. Everbank's financial philosophy flies in the face of the status quo. They believe your money's performance should not be determined by today's economic circumstances, but by the drive to rise above them and create opportunities that favor your objectives. If that excites you, like it does me, call 1-855-750-4051 to find out what they can do for you. That's 1-855-750-4051. Call them today. Everbank is a member FDIC and equal housing lender.
If you're an active trader looking for that extra edge when it comes to trading and investments, then now is a great time to get a 2-week free trial to Tom O'Brien's daily market letter, Market Insights. Tom O'Brien's daily newsletter, Market Insights, comes out every market day at around 9:30 a.m. and provides Tom's daily commentary on the broad market, including the Dow, NASDAQ, and S&P, plus specific trade recommendations. There's even an update published most afternoons to keep you informed about the day's market activity. He'll give you the entry price, price target, and stop price of each stock and option trade. With Market Insights, there's nothing left to guessing. For all the details and to get your 2-week free trial to Market Insights started today, visit TFNN.com.
It's 2016 and TFNN has a brand new programming lineup to kick things off. Starting January 4th, swim lessons by Thinkorswim and TD Ameritrade will be airing 5 days a week at noon Eastern Time. Join hosts Scott Connor, Kevin Hinks, and Cindy Faber as they host their daily options program live at noon 5 days a week with no commercials for the entire hour. Nico DeHaan and Paige Clark will be moving their program, Living a Primal Lifestyle, to twice a week, Tuesdays and Thursdays from 7 a.m. until 8 a.m. Eastern Time. Wake up with Nico and Paige and start your day off right. The Bull Bear Binary Option Hour by Nadex will now be live Mondays and Fridays at 10 a.m. Start and end the week with the 3 hosts, Tom O'Brien, Tommy O'Brien, and Daryl Martin, as they break down the world of trading binary options and spreads. For all the details on the new 2016 programming lineup, visit the front page of TFNN.com. TFNN, educating investors.
Join David White as he keeps you up to date on the latest tech stocks while he uses his Power Law Vector Indicator to identify the best trades. The Power Trading Hour, next on TFNN.
Welcome back. Dow's off 44. S&P is down 50 cents. And speaking of Davids, let's go to David in Tennessee. David, thanks for calling. Thanks for holding so long. How are you this afternoon?
I'm fine.
Excellent.
I wondered what you might think about if gold was still going to have a correction.
I do believe that it is. if we take a look at what gold did yesterday, what it's done today, and I've got the August contract up on my screen right now, yesterday was nothing more than price moving up into a level of resistance, and that's that little red line that is on my screen out here. If, in fact, gold were to close above 1340.40 on the August contract, then I would have to change my opinion, because the message that would be coming as a level of resistance has failed. And at this stage here, that's not what has taken place. So 1340.40 on that contract is the number to be watching at this stage here. This is going to be a longer-term roll. I believe this is going to last for a couple months to come. So August and September ought to continue to see prices move lower inside of the metal. So that's my take on the charts read at this point in time. Does that help you?
And at least I know the direction it's going.
Excuse me?
I said, at least I know the direction you think it's going.
Yeah.
How low do you think it'll get?
You know, that's a harder one for me to evaluate. I would just take the things one step at a time. I'm looking at levels. I will tell you that right now, the first key level on any move lower, we know where resistance is, so we're going to go ahead and respect and pay attention to that. We can also respect support. And the first level of support that gives us an idea that this juggernaut is ready to move downside is going to be a close below 1315.10. And that, again, is on the August contract. We're rolling over to December here, so that's going to be a different number. But 1315.10, then what that tells us, David, is that 1289 becomes the target. And then beyond 1289, assuming that the read is correct here, then you're looking at 1268 and then 1239. So I'm just going to have to watch this one step at a time. I can tell you that, or I can share with you, I won't tell you anything, I'll just simply share with you that this group of traders right here, which are the large commercial traders, when it comes to silver, it's not even showing silver, they're at their highest net short position in silver since 2009. They're expecting a sizable decline. This is the gold chart, and they too are expecting a sizable decline out there as well. So, but how far it's going to take us, I'll be looking for patterns. And in fact, if gold and silver do continue moving lower, I'll be looking for those patterns in the October timeframe, looking for a long-term buy. So that's my take at the moment. I hope that helps you out.
I appreciate it, sir.
You betcha. And thanks so much for listening. That was David in Tennessee, and that was covering, in essence, both gold and silver. So we've got about a minute to go before we hand things off to David White out here. I don't really know what else I can share for you. I'd say we're watching the Dow, because that's the weak link out here, which, by the way, the Dow, if we take a look at it, the overbought characteristic of the market is kind of done now. The Dow itself, if I can get to this chart here real quick, the Dow, let me explode this up on my screen here. It's already exploded. If we take a look at that advanced decline oscillator, it was in the overbought range when it was up about the 4 level, and that was back here on July the 13th. And now we can see it's down below zero. It says sellers are in control, no question of it. We know we've got that consolidation breakout top to be watching, and it's down now about a -2. And throughout 2016, with the exception of January 8th, this level is where we have seen other market bottoms or bounces form from. So we may just be a couple days away out here from a nice little bottom inside of the Dow. Time will tell, but stay tuned, folks. On Terrific Thursday, you've got David White, the Tom O'Brien Show, and Andy Heck to take it on home. Have a terrific Thursday. We'll see you on Fabulous Friday. Take care, folks.
Larry Pesavento has just started his brand new service, Fibonacci 24/7, and he's already delivering content to his subscribers on a daily basis when the market's opened and even on weekends. Each Monday, you'll receive Larry's written report that provides detailed commentary and a summary on the charts and videos that Larry sends out. And throughout the week, when warranted, Larry will send out via charts or videos or both the key markets that he is watching during the day. This will be up-to-the-date, active trading information that will help you in your daily trading. In Larry's first week alone, he sent out 25 charts, 6 videos, and a full report to his subscribers in just 1 week. If you're a technical trader that uses patterns and retracements to trade, then Larry's service Fibonacci 24/7 is something that you must try. Right now, new subscribers can get a full 30-day money-back guarantee. With nothing to risk, sign up now to Larry Pesavento's Fibonacci 24/7 by visiting the front page of TFNN.com under Trading Newsletters.
You're watching Tiger TV.